It's about that time of day again. My name is Joseph James. It's Wednesday evening, November 16th, 2016, and this is your nightly newsletter. We're covering crude, S&P 500, gold, euro, and FDAX this evening on the newsletter. We got a couple trading ranges, a triangle, a channel overshoot, and we got Janet Yellen on Capitol Hill tomorrow, which means we have a very specific plan of attack for Thursday's trading session. As always, I got another jam-packed newsletter in store for you guys and gals. Plenty of reliable trading opportunities setting up for tomorrow's session. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come over here and join me on the blog at Sideways Markets for the full-length version and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter is ready. Download those charts. That's right, you can have all the charts from tonight's video on your computer for tomorrow. Click here to download those charts right below tonight's video. Upper right-hand corner, don't forget, if you're not a student here at School of Trade, I got a free pass for you to come out and join me as a guest in our trade room this week. And please remember, if you're brand new here to the SOT community, we got a great frequently asked questions page on our blog where you can learn all about the who, what, where, when, and why. And I'm always here standing by to answer all your questions as you need them along the way. Hope you guys are having a great week so far. Happy hump day to you guys. Boy, another big moving day here. We got some ranges to work with. We got a couple big moves here from today. Before we jump into our charts, though, let's make sure we look at the schedule here for tonight and tomorrow. We do have some news in the overnight session here, the labor force survey coming from our friends down under. Be aware of that if you trade in the overnight session. If you're with me here tomorrow in the U.S. session, though, let's see what we got here. Coming out of London, we've got 4:30 a.m. retail sales, ECB minutes at 7:30 a.m. We're going to have the CPI, we've got the housing starts and the jobless claims and the Philly Fed all at 8:30. And then drum roll. Yeah, that's Janet Yellen tomorrow at 10 a.m. Eastern time. That's gonna be the bulk of the news tomorrow. Again, we get some major news tonight. Our friends in Australia got a peppering of news tomorrow morning, as you can see here, starting off with retail sales from our good friends in Great Britain at 4:30 a.m. ECB meeting minutes at 7:30 a.m. You know people are going to be reading those tomorrow. And, of course, we have a ton of news here coming out at 8:30. We got inflation numbers, some CPI, housing numbers, right, at 8:30, jobs numbers, and, of course, manufacturing. Look at the collection of news we've had this week. Inflation, housing, and nobody cares about jobless claims. They haven't done that. They haven't cared about that for years. And we've got, of course, manufacturing tomorrow morning, a plethora of different news events tomorrow. And, of course, who better to finish up a very diverse collection of news but my gal, Janet Yellen? She'll be, of course, this is her semi-annual testimony, right, on Capitol Hill tomorrow, right, and so we'll be hearing from her tomorrow morning at 10 a.m. Eastern time. We know what the major news is tomorrow. Do not underestimate, though, how this volume may drop tomorrow around Janet Yellen's testimony. Usually what happens is you're going to see it go until about 9:45. You know, the NYSE will open up at 9:30. Traders will get their trades off to the races at 9:30. By about 9:45, though, it's usually pretty slow. Everybody waiting to see what's going to come out of Janet Yellen's mouth. It's always going to be a little bit slow leading into it. Half an hour, 45 minutes later, though, once all the formalities are out of the way and they start peppering her with all the live Q&A, you can probably find it on any of the news media websites tomorrow, but that will be when the volatility starts to pick up. So really, tomorrow is kind of similar to what we saw today. Get into it early. Get out early around that news tomorrow at 10 a.m. and then keep your eyes open for that late morning move. A lot of times when Janet Yellen speaks at 10 o'clock, you're going to get that, 7 a.m. until 9:45. Then 10 to 11 might be a little bit slow, at least 10 to 10:30. And then, of course, 10:45, 11 o'clock, we start seeing that volatility kick back in. So be aware of that late in tomorrow's session. Don't forget, though, you do not need to do this alone. I'll be with all of our students tomorrow in real time at 8 o'clock Eastern time in our trade room. Let's kick this thing off here tonight. We got some crude, we got some S&P, some gold, some euro, some DAX. Crude is range bound and trying to finish rotation back to the low of the range this evening, where we assume buyers will be waiting to buy the lows. Our plan for trading inside a range is to buy the low with seller failure, sell the high with buyer failure, and avoid the middle, because the middle of a trading range is where price action will be the least reliable, right? Or the most unreliable, if I can use kind of some crazy grammar there. As you can see here today, we've got double tops, we have double bottoms, double tops. This, of course, being a trading range. What I'm going to do is my focus on a trading range environment is to sell the highs using buyer failure. I want to buy those lows using seller failure. Okay, we'll talk more about that in a moment. And I want to avoid the middle, right? Avoid the middle. The middle, of course, remember what happens is you've got buyers buying off the low, you have sellers selling off the high, right? And in the middle is where it's going to be the least reliable. Now, I've also got some trend lines drawn in here as well, resistance trend lines, support trend lines. You're going to see a few of these on various charts in tonight's newsletter. Really what you want to focus on, though, is use those trend lines as targets as we rotate back and forth, but really, really focus on getting down to that low, buying that low, right? Getting up to that high, selling that high, really focus on getting that range to expand, right? What we don't want to do is, what I'd rather do is get this price to get out of this range. Look for the 2-try rule. Sellers try once, sellers try twice, right? They can't quite hold the pullback and keep it going, right? And of course, we can then buy on the way back up. I'd much rather be buying as this price now comes back into the range. This is really important, right? I'd rather be buying as the price comes back into the range than to try to do something like this where it comes down once, twice, right? See the difference there? Now I'm buying into the middle of that range. That makes sense, right? So I want to really see this range expanded. Try to continue. If they can't, right, then of course, green light to be buying off of that low. Range rotation says we go from the high to the low to the high back down to the low. We got a nice little convenient measured move waiting for us down there. There's a swing down there at 45.03. Pretty cut and dry here right now. Wait for it to try to break out of the range. Look for that 2-try rule and then buy off that low up to the high. Buyers try once, buyers try twice, sell it back down off that high. Please don't forget, we cover how to define all of the rules of trading ranges inside of our intermediate course here at School of Trade. And in the advanced course, we bring it all together with trade setups and the trading plan. So all the entry triggers, of course, are going to be defined in our trading plan and covered in the advanced course for all of our students. One last thing to remember here about crude. We are watching rollover. As I look at this tonight here, we are still on the 12/16 contract. Like I said in last night's newsletter, a couple days before the 18th, right? We start looking at rollover. And so we're starting to look at the volume here, and we're watching that rollover to the 0117. As soon as we have more volume trading on the CL 0117, we'll make the move over to the 117 contract. I can't even believe I'm talking about January 2017 right now. How time flies when you're having fun. But again, watch out for rollover tomorrow. Avoid that middle, buy those lows, sell those highs, and don't forget to come out and join me tomorrow morning in real time at 8 o'clock Eastern time, and we'll find the entries together. Let's keep moving here. S&P is bearish and trading inside a very narrow range this evening, which means our plan for tomorrow is very similar to crude. Sell the highs with buyer failures, buy the lows using seller failures. I don't think we have to worry about getting in the middle, right? Can you even see the middle of this darn range? I mean, you got to really squint your eyes, right? There is a middle in there, and this is one of those examples where, unlike crude oil, we have a bias to this range. You're going to see a bias on a range later on in tonight's newsletter. This is a very good example. Strong bear channel. Now remember, guys, what do strong bear channels tell me? It tells me the objective is to get back down to retest that low. What haven't they done yet? They haven't retested that low. So sellers are going to keep trying to, at the very least, right? Get a retest of that low. And like I said before on crude oil, that's where you want to be looking for your best opportunities. Now, with that bearish trend in mind, if I had to choose long or short for tomorrow, what would I choose? I would choose to sell off the high. However, range rotation says low to high, high to low, low to high, high to low, low to high, right? You get the point, right? Back down to the low. That's where we should be rotating next. If we do happen to go higher here, now that becomes a rotation undershoot, and you can, of course, anticipate now an overshoot of about the same amount, right, up to the upside. So if we do go up, buyers try once, buyers try twice, sell it back down. Again, you're going to notice I've drawn out a couple of these trend lines here, right? These trend lines here coming up. Those trend lines will make for excellent targets. That way you're not getting your pocket picked trying to hold all the way down to the low of that range. Watch out for that trend line coming down, right? So sellers looking for that 2-try rule off the high to sell the high. Buyers here are looking for that once, twice, right? Buy off the low. If I do have to choose buying or selling, I'll choose to be a bear because of the overall bear bias. Now, this is a real narrow range. What would it take to get a breakout? We talked about the 2-try rule, right? As price goes down, sellers try once, sellers try twice. Well, if we continue here now, right? If we continue with that second try and we are able to stay outside of that range, now we know we have a successful breakout. The one thing you want to remember about a trading range is that most breakouts fail. And so when you look at a trading range and you're wondering, is this a strong enough breakout? I always tell my students in the trade room about this stuff. If you have to ask, is this a strong enough breakout? It's probably not a strong enough breakout. Breakouts of trading ranges that are going to be successful need to either be very, very strong, right? You know, for example, if we were to break down and this thing really launches lower, it's an obvious breakout, right? It's a very strong breakdown, brings the moving average with it, right? Clears everything out. Those types of breakouts are obvious, right? The other types of breakouts that are a lot more common are the ones that kind of, they sneak their way out, right? Moving average comes down, and then this is where they've got to hold. They have to hold and then show that they can really continue through it. My definition is going to be get the moving average outside the range and show me that continuation, right, that new lower low. We'll obviously be watching this tomorrow with all of our students here. So don't forget, as we go lower, 2-try rule, seller failure, buy the low. As we go higher, 2-try rule, buyer failure, sell the high. The key word for breakouts is strength. And if you have to ask if it's strong enough, it's probably not going to be strong enough, right, whatsoever. Keep an eye to the downside here. If we do get some strong moves here, prior month high, measured move. And again, I wouldn't mind seeing it go all the way down, seller failure, and all the way right back up, right? The more we expand out that range, right, the more we expand out that range, the more profit potential we have as the market shoots back up into that range. So keep an eye on that tomorrow. You want to get outside that range. That way you're not buying back inside the middle. You want to buy on the way back into that range. Let's keep going. How about some gold? The yellow metal is trading at the low of a triangle this evening, which tells us to trade just like a range. Buy the low using seller failure, sell the high using buyer failure, and avoid the middle like the plague tomorrow until we see a strong breakout that can hold and give us a new trend to work with. Now, I probably could have closed my eyes on this one tonight. As you can see, this is a multi-day range, and I get this question a lot. What's my favorite type of environment? Ranges like these are so easy because as you've seen this week, every time the market goes up, 2-try rule, back down. Every time the market goes down, 2-try rule, back up. Buyer failures at the high. If you recall, there was a range high here last night, right? Buyer failure off the high, back down. Sellers try once, sellers try twice. Seller failure going back up, right? Rinse and repeat over and over again. Focus on failures. Now, in this particular example, it's more like a triangle. Triangles, though, are pretty much exactly like ranges. Buy the low, sell the high. Range rotation says we go from the high to the low, low to the high, high to the low, low to the high, high to the low. Where are we going next? Yep, most likely back to the high. With that said, what you really want to focus your energy on is not the actual triangle itself, but focus your attention on the major swings. These are the areas of resistance that you really want to be focused on, right? I'm not, and again, when it's a wider, for example, if I try to sell the high of this triangle right now, I'm selling.